report analysis videos on Tuesday 19th of June with me, Richard Perry, market analyst at Hantec Markets. Risk off, definitely. We've seen the markets take a significant leg lower actually, and that has come with this sort of move towards escalating the trade tensions between US and China by the US. China reciprocated on the US's plans for $50 billion worth of trade tariffs, and subsequently the US have ramped it up overnight, and they've now announced that they would be looking at $200 billion worth of trade tariffs at 10%. So this is really significantly hitting equities. Look at this, DAX 1.9% lower, and that's below 12,600, which is a key technical level on the DAX. We're seeing pretty much across the board safe haven plays outperforming. The yen is a really strong performer today across the forex majors. The dollar had been a bit mixed early doors, but now it's gaining against the euro and sterling, and also obviously against the commodity currencies as well. We've also seen gold bouncing. Now gold has been under pressure in recent sessions, but managing to catch a bid today. This move on the dollar is helping the dollar back higher again. Can it break through 95.15, which is that key resistance on dollar index, that 2017 Q4 2017 high on dollar index? So can it make that move? It's sort of edging higher today, but what we've seen is yields on global, the major global bond yields falling away. The 10-year on the DAX, 10-year Bund falling away to 0.36 on the UK gilt, and also the 10-year Treasury yield as well. So really strong risk aversion that we are seeing through these markets today. Now, this is clearly dominating proceedings today. There's not a great deal on the economic calendar. We've got the business permits and housing starts for the US. Again, they're around levels that we've seen recently. But we also have a speech by Mario Draghi today at Sintra, and it could well be that Draghi offers a bit more clarification on the ECB's latest move to taper asset purchases, but also to sort of put a time frame on, or potential time frame of late or of summer next year, when they're going to potentially first hike rates. So it'd be interesting to see how that affects the euro today. But apart from that, we're certainly seeing risk aversion. Now on my charts of the day, Aussie dollar, that risk aversion is seen considerably here in the last few days, where we've seen sharp move to the downside, completely scuppering this recovery that we'd seen. The downtrend has continued, and the market is now broken below 74.10, that key low at 74.10, which has been sort of protecting these May-June 2017 lows, for, which are again very important levels of support on the Aussie dollar. So yeah, it certainly seems as though that the market is falling away. That 74.10 mark that had been the May low now becomes a basis of resistance. It was tested yesterday, but broke decisively during today's session, so that old support becomes new resistance. Look at these momentum indicators dropping sharply. The RSI, yes, it's at 30, but it has gone below 30 previously. The MACD lines are the ones that have the real downside potential, though, aren't they? With that recent cross lower and also accelerating lower. Stochastics very much in bear territory there. You can see the hourly chart where we're sort of forming low highs, low lows. Don't know exactly what Reuters have done to give me that nice little gap of pricing there, but anyway, so the old support of 74.10 becomes new resistance, and that between 74.10, 74.30, 74.40 area seems to be a basis of resistance now. So any sort of unwinding move is likely to be sold into on the Aussie dollar, because it certainly looks as though it is under significant pressure, and a test of 73.25 is likely. Today's low, 73.50, is initial support. So I wish you good luck in your trading today, and I will speak to you later.